The views and opinions expressed during this program are not necessarily those of Overseas Radio Network, the Expat Broadcasting Group, the staff, management, or broadcast partners. All information provided is for educational purposes only. Before taking action, consult a licensed professional.
Welcome to Global Legal Advisor with Joel Nagel. To be part of the show, call toll-free worldwide 855-655-2121 or Skype your questions to Joel now at ORN Live. And now, your Global Legal Advisor, Joel Nagel.
Hello, welcome to the Global Legal Advisor. This is Attorney Joel Nagel, and I'm broadcasting live from cold and rainy Sewickley, Pennsylvania. It's just warm enough that it's rain and not snow, but that's supposed to change here over the late afternoon into the evening. And tomorrow, for the first day of winter, we are expecting to have a nice winter snowstorm here in Sewickley. I hope the show finds all of our listeners well today, and I want to start by wishing a very happy anniversary to my good friends Pat and Doug, who are celebrating their 52nd wedding anniversary in the Dallas, Texas area. Happy anniversary, guys, and thanks for listening to the show. We have a great show for you today. This is the last Global Legal Advisor show for the year, and I wanted to take the opportunity to talk about some of the legal, tax, compliance issues that are changing rapidly as we approach the end of the year and we go into 2013. Probably most of you have heard in the news things that they talk about the White House and Congress negotiating over the extensions to the Bush tax cuts, and what that means if they do, what that means if they don't. So I wanted to have some experts with us who really understand what's going on in the tax and regulatory environment, and I've invited back my good friend Maurice Glazer. Maury is the CEO of the Glazer Financial Network, based, in Dallas, Texas. His son has taken over as the president, David Glazer, but Maury is still very involved in the day-to-day operations. And along with Maury, we have a few of his colleagues, Teresa Johnson and Gary Shearling. So Maury, Teresa, Gary, thanks for being here on the Global Legal Advisor today, and welcome to the show.
It's our pleasure to be here, and thank you for inviting us.
Thank you.
Maury, I know that whenever we talk and whenever we see each other at conferences, I know that you're a big believer in planning. I don't know how many times I hear you use that word. Are there things that our listeners should be doing now with their planning before the end of 2012? Is there any time left to really make any meaningful impact to your 2012 taxes at this point?
Yeah, and in fact, there's various levels of planning depending on how much income you make. If you make, if you're in the higher tax bracket, you might have to pay in all your tax by December 31st or January 1st. And then it goes all the way out to January 15th, and if you're in the lower brackets. But some of the things, I just emailed a client in California and said, okay, let's take a look at buying a 6,000-pound vehicle, because she said she needed a new car. I said, look at if you need furniture. She makes a substantial amount of money. And I said, we really need to project where we think we're going to be based on what the current law is, and try to decide what we're not going to pay tax on and what we are going to pay tax on, because it might be the time to pull money back into the company or into the personal tax return rather than defer it. As I say all the time, I love to defer, but this is one of those years where you might decide to pick up that additional income this year. Especially because like dividends, right now you have loans on your book, you can take it out as dividends and pay 15% on it. God only knows if that's going to continue going into 2013.
Right. Well, that makes a lot of sense. Now, of course, here on the Global Legal Advisor, we focus on a lot of the international issues that are going on. And I know here in our firm, we're seeing a lot of people rushing to try to utilize the $5 million gift and estate exemption before it, essentially expires or is reduced back to the $1 million threshold. Or what are you seeing in that area?
Well, my estate tax attorney friends are really doing the gifting and what have you right now. Of course, in your situation, to move things offshore in trust is going to be a little more difficult, but most of the attorneys are setting up family limited partnerships and trust and trying to do the gifting and whatever, getting the appraisals done and trying to move that money prior to the, to whatever happens. And, of course, you just got to take a guess where we think it's going to be.
Well, and circling back to that point, some of it's guesswork, some of it isn't. If there isn't some big breakthrough where the Republicans and Democrats sit down at the campfire and sing Kumbaya between now and year end, tell us some of the very specific tax rate changes that we can expect as of January 1st.
Well, I'm guessing that we could see dividends and interest go up to 20%.
I would say 20.
And then I would think capital gains could be 20%.
Right.
And, of course, that doesn't count the 3.8% that's in Obamacare and, some of those hidden taxes that you talk about all the time. So, I think we're going to see, a third increase in overall tax rates as far as passive income goes.
See, if everything expires and they do nothing, obviously I think they're going to do something, but if everything expires, we go back to the Bush, or the Bush rates expire, we go back to pre-Bush rates.
Yeah, that's exactly what I was trying to focus on because, I'm not a big believer that there's going to be a 11th hour breakthrough, and that is sort of asking people to look into a crystal ball. So let's assume nothing happens. Talk about not only investment income, but also ordinary income and, all the other rates as best you know them.
Well, that would then bump up basically 5% across the board. Like the top rate right now is 35% federally. That'll move to 39.6%. And the other rates all incrementally will go up about that 4 or 5%. So that's just an automatic boost of rates on everything on ordinary income.
And
then the Obamacare on top of that, right?
And the
absolutely.
Exactly. The 3.8% is already in effect.
Right.
So if you're a single person and you have $200,000 of adjusted gross income, then you're going to be calculating an additional 3.8% either on your investment income or the amount of income over the AGI of $200,000. It's $250,000 for married couples.
Right.
Okay. Well, let's take a quick break right there. I want to come back and follow up on that point because I think that is a big issue. Where are these tax increases going to take effect? Everybody wants the taxes to affect everyone else and not themselves, but we're going to take a quick break. This is Joel Nagel with the Global Legal Advisor here on the Overseas Radio Network with our special guest, Maury Glazer and company, and we'll be back right after this message.
You're tuned in to OverseasRadio.com, the station to help you reach your dream destination.
Looking to invest, live, or retire overseas? Before you pack your bags, you need to log on to NagelLaw.com. It's the only stop you need to make for global business, asset protection, estate planning, overseas residency, and citizenship needs. Our experts have experience working in 41 countries around the world. Starting a business abroad can be overwhelming without expert help. We assist clients with foreign trust, foundations, corporations, LLCs, IBCs, and property acquisition. Need help with IRA assets abroad, capital formation, foreign securities issues, banking, brokerage, or finance needs? NagelLaw.com. We ensure compliance with U.S. tax and regulatory laws. We engineer global structures to help our clients achieve their personal and business objectives. To find out about our introductory personal asset protection plan, visit NagelLaw.com, NagelLaw.com. We represent capital overseas.
Are you ready to enjoy a truly personal banking relationship again? One where a real human being will take your call and knows you by name? Does bank privacy and secrecy mean something to you? Well, these mean something to us at Key International Bank Limited. You and your needs are the most important aspect of the relationship. Key International Bank has been in business since 2003 and serves discerning clients who want high-level private banking and investment services. Traditional services include deposit and savings accounts in 5 different currencies, international debit cards for quick ease to your money, access to a wide variety of investment products and funds unavailable in the United States and Canada, and loans in multiple currencies for properties and homes throughout Latin America. Key International Bank Limited, your private banking solution. Visit our website at www.bankinbelize.com.
Dreaming of a glistening jamon? Craving a sliver of aged manchego? Find all of these products and many more at latienda.com. The best of Spain. We founded our company 15 years ago as an online provider of gourmet artisan food from Spain. We were the first website to offer jamon, Spain's famous ham, to America. Today, we carry over 800 products and ship to the UK, the US, Europe, and Canada. Every year, we make our own food pilgrimages back to Spain, renewing old friendships with artisan providers and seeking new and interesting traditional foods to add to our collection both online and through our catalog. Come and explore www.latienda.com and get 10% off your order when you use the promo code Camino. La Tienda, the best of Spain. www.latienda.com.
Worried about rising taxes, costly insurance, out-of-control healthcare, economic decline, staggering debt, mortgages, and retirement? It doesn't have to be this way. Escape to Ecuador, one of the most beautiful countries on the planet, and at EcuadorAtYourService.com, be your guide. Ecuador has been named the #1 retirement destination in the world 3 times in a row. So if you're searching for beaches, jungles, farmlands, cities, affordable healthcare, and a richer lifestyle at half the cost, contact EcuadorAtYourService.com.
The world is a beautiful place, so listen up. The Overseas Radio Network.
Welcome back to the Global Legal Advisor. This is Attorney Joel Nagel. We're broadcasting live today from Sewickley, Pennsylvania on a cold, rainy end of fall day, and we're discussing year-end international, offshore accounting, tax, and regulatory issues with my special guest, Maury Glazer, and 2 of his colleagues, Teresa Johnson and Gary Shearling, from the Glazer Financial Network. Maury Glazer is the CEO of Glazer Financial Network, and his company provides tax and accounting services to individuals and corporations. And I know that a number of my clients use Maury's services, particularly when they're engaged in international business, and they require a level of expertise that they can't get from their local domestic accountant CPAs. And Teresa, right before the break, I had to cut you off a little bit. We were talking about the tax rates. Is there any consensus starting to emerge from Washington as to really where the bar is being set as far as whose taxes are really going to change come January 1?
I think it's still all up in the air as far as Congress is concerned. Right before the break, we were talking about the Obamacare 3.8% increase. That was already established with the Obamacare legislation. So starting January 1st, 2013, if you make over a certain amount, adjusted gross income, that's $200,000 for a single and $250,000 for a married couple, then you will be facing potentially 3.8% taxes on investment income.
over and above the
normal tax rate.
Right.
So again, that's sort of already baked into the cake, unless everybody can get together and come up with something different.
That is already
that is law.
That is law
that
already.
Is law. That's effective January 1.
Yeah, that has to do with the Obamacare legislation. So that's already in effect starting January 1st, 2013. And then any normal tax rate is kind of up to Congress as far as where those are going to fall.
Joel, I always look at it, of course, when I started in accounting and tax, passive tax on passive income was 86%. And people don't believe that. So when I look at some of these things, the reason we do planning is because we need to think about, well, should we do this or should we do that? And then, of course, in today's computer world, we can calculate out the various scenarios so we can say, hey, if you do this, here's where you're going. We have a client in Turkey who, I was talking about should you do an offshore LLC? Because he wants to use his IRA money for, I guess, real estate, although he's got millions and millions of dollars of investments in all kinds of different things in Turkey. And so we showed him, okay, if you take it all out of the IRA, it's going to cost you $100,000 or whatever the tax was. And if we do a self-directed LLC, we'll be able to invest in those foreign assets. And he was even afraid to say, well, I don't know if I should even leave it in the LLC if it's attached to a custodian in the U.S. He was, he pretty much was. So what we try to do is give everybody options, say, hey, here's where we think it might go. And as Teresa said, the 3.8 is there. So on real estate sales, on houses, on even on the residents, if you make over $500,000, we're going to have some additional tax if their income is up. And I don't think they're ever going to change that. They need the money for Medicare, and even the Republicans, I think, are going to be stuck with bringing that money in. It's an interesting time. I've never, I shouldn't say never, but it's interesting that the two sides just can't come to some kind of compromise to get it done.
Yeah, it seems
we
like...
We believe that there will be higher rates that somewhere along the line we're going to have to pay something. If I could just add one thing I was starting to say before, you said there's a general planning what to do before the end of the year. Our basic thrust just generally is, and Maury said a little bit earlier, is we basically try to get some income that we can into 2012 because now we know the rates. In 2013, as we were saying, it's, we're a little confused. So take the income that is solid income. Some people are taking the bonuses, declaring special dividends. Some are doing Roth conversions from the IRAs into Roth because we know the tax rates are lower. They're just doing that kind of a thing. And then on the flip side of that, we're trying to defer or delay some deductions that we normally would try to grab now, but we kind of push them off into the year 2013 because we know with potential higher rates, we would like to have extra deductions. Like, for example, on your real estate houses, real estate taxes, some people flip-flop those to pay them to maximize the deduction. This time you may want to bump that into 2013 and have a double deduction there to offset the higher rates, potentially.
Yeah, that makes a lot of sense. I had one of my clients, and I know this is, an unusual situation and not too many people can really take this approach, but happens to be a fairly wealthy individual. And, we were talking about the uncertainty in the tax rates. And, after the election, he said basically, well, I'm planning on sitting out paying tax the next couple of years. And I said, well, what do you mean you're going to sit out? And he said, well, I'm going to make a big sale of some capital appreciated assets, and I'm going to pay, several $1 million in capital gains tax this year at a 15% rate. And then I have a big stockpile of cash sitting in the bank, and, for the next anywhere from 3 to 4 years, if the rates go up, it's not going to affect me because I'm not going to pay any more rates. And I think that's, that's part of the, I think they refer to it as the Laffer curve, which is that something a lot of politicians don't understand, which is as rates go up, people's resistance and reluctance to pay those rates goes up as well. So they look for ways to not pay. And at least in this fellow's case, he has his own answer, which, most of us working folks can't really do that, but.
Or Joel, if leave it in the corporation, pay the corporate tax, and don't take any salary, or at least limit the amount of salary you're taking out. That sure as heck is another concept. There's all kinds of things we're talking about in regards to when we look at all this. What should we do? One for sure. I'm trying to tell people, hey, if we have the option, we have people. If you can pay the corporate rate at 34% instead of taking it out personally at 34%, it makes sense because we've got all these additional potential increases on the personal side. So we look at all of that. We review the last 3 years' tax returns and try to get a pattern, especially for new clients. For old clients that have been with us for a while, we're constantly looking at things they should be doing, talking about the 6,000-pound vehicles so we can take bonus depreciation, to take Section 179 depreciation, buy new equipment. We have a rice farmer up in Arkansas who's very, very successful.
Right.
We buy millions of dollars of equipment, and we have maximized those deductions over the last 4 or 5 years.
Right.
And so if everybody just not put their head in the sand and really think about what's going on and make their professionals really take a look at what's happening and do the planning.
Okay, Maury, listen, we're going to have to take another quick break, and when we come back, I want to focus in specifically on international offshore accounting and tax regulatory issues. So I'm going to ask you about the most important things for folks in that category. But we're going to take a quick break. This is Joel Nagel on the Overseas Radio Network.
You're tuned in to OverseasRadio.com, the station to help you reach your dream destination.
From Feature Story News in London, I'm Catherine Drew. The United Nations says tens of thousands of Palestinians are fleeing Syria following deadly clashes in a refugee camp in Damascus. The Yarmouk camp was bombed by Syrian warplanes on Sunday following the suspected influx of rebel fighters. The UN estimates that two-thirds of the 150,000 Palestinians are now heading towards Lebanon. Lisa Gilliam, the Deputy Chief of Staff from the UN Agency for Palestinian Refugees, says the number of people trying to escape is staggering.
There are people still fleeing. We don't know how many, perhaps as many as 100,000 at this point. We really don't know. And UNRWA and its partners are working around the clock to ensure they're fed and housed. But for the most part, we don't know where they are. It's a humanitarian crisis that is still playing itself out.
Egypt's new public prosecutor, Talat Ibrahim, has retracted an offer to resign, made following protests about his appointment, according to Egyptian media. Mr. Ibrahim is quoted as saying he made the offer under pressure on Monday. Mr. Ibrahim was appointed by President Mohamed Morsi last month after his predecessor was sacked. The dismissal angered senior judges who saw it as an attack on their authority. There are growing tensions between President Morsi and his Muslim Brotherhood Party and secular political opponents and the judiciary as the country struggles to compose a new constitution. U.S. Vice President Joe Biden is starting work on ways to reduce gun violence following the shootings at an elementary school in Connecticut in which 20 children and 6 teachers died. The first task force meeting is taking place in the nation's capital to discuss a range of ideas to prevent similar incidents. From Washington, Nick Harper reports.
Vice President Biden, along with cabinet members, are meeting for the first time to try and develop new U.S. policy plans on guns. The task force has been set up by President Obama, who said that he wants concrete proposals on gun control by the end of next month. Options already suggested include a renewal of a ban on assault weapons, limiting high-capacity ammunition, and closing loopholes which allow guns to be sold without background checks. Analysts here in Washington say the Vice President, with his many years of experience, could be instrumental in getting proposed changes through Congress, especially the Republican-controlled House of Representatives, which is likely to put up strong resistance, despite the terrible shootings at Sandy Hook Elementary School less than a week ago.
A new film about the hunt for Osama bin Laden is inaccurate for suggesting torture helped lead to his discovery, according to 3 U.S. senators. The lawmakers have outlined their objections to Zero Dark 30 in a letter to the head of Sony Pictures Entertainment. The letter says the film, directed by Catherine Bigelow, is perpetuating the myth that torture is effective. They said that Sony had an obligation to alter the movie so that people were not misled. From bureaus worldwide, this is FSN.
Ready to learn about a new life overseas? You're at the right place. This is the Overseas Radio Network.
Welcome back to the Global Legal Advisor. This is Attorney Joel Nagel. We're broadcasting live from Sewickley, Pennsylvania. Our program today is discussing the year-end tax, accounting, and regulatory issues. And my special guest is Maury Glazer, CEO of the Glazer Financial Network, as well as two of his colleagues, Teresa Johnson and Gary Sherling. Maury, right before we went to break, we were sort of talking about the changes in general. You were talking about some of the ideas you give your clients. You brought up some things like accelerating dividends, pushing out expenses. But what about folks that have business abroad, folks that have international companies and foreign trusts? What are the most important things to keep in mind from a tax planning point of view for our listeners with those types of international structures?
Well, I really think that the basic issue, and Teresa Johnson has done, along with a couple of the other accountants in our office, have done a lot of research. You got to review and see what the assets are and what the reporting compliance issues are. If you have trust or corporations or foreign accounts or whatever, you really have to go through and disclose everything that you own offshore. And of course, we talk about that new 8938, which is you're going to have to disclose stock that you own in foreign corporations. So there's a tremendous disclosure line that you have to follow to make sure that you're covered. If you have offshore property and offshore accounts and offshore stock and bonds and whatever. So we tend to try to analyze what people have and then try to tell them what they need to do compliance-wise. Because even if they decide to leave the country, we're going to have to disclose what it is and prepay the tax so they can leave. It's a pretty big project to try to come up with what the potential tax is for retirement plans and whatever. You just can't pick up and leave. I had a doctor in here yesterday who said, "Well, I'm already in Brazil. I don't have to do anything. Well, you got an apartment building here. Your mother's here. You got an IRA here. No, there's some things you have to think about. Well, I'm just going to disappear. Okay, that's fine.
Sure,
when you get off
and when you talk about disclosure, it seems that some of the new rules, for example, the FATCA, which stands for Foreign Account Tax Compliance Act, is really all about trying to force disclosure and make sure people are doing proper disclosure. Are you seeing FATCA as having an effect on forcing that type of disclosure compliance from folks who maybe were reluctant to do so in the past?
Yes, absolutely. The Form 8938, Maury just mentioned that a minute ago, that was a new form that was required starting in 2011 with 2011 tax returns and going forward, where you have to disclose pretty much what they call specified foreign financial assets. So you've got bank accounts, you've got stocks in foreign companies, you've got partnership interests in foreign companies, foreign trusts, and those all need to be disclosed on that 8938, which is filed with your annual tax return.
And Teresa, explain the teeth that in these new rules that are forcing people who maybe weren't compliant in the past to scratch their head and say, "Oh, I better really, I better do what I'm supposed to do now with regard to these reports." How are they forcing compliance with regard to FATCA?
Well, one of the things that this new Form 8938 does is it could potentially bring to light some of these accounts that people have been hiding, and then the IRS, if they get a hold of that, they could hit people with severe penalties and even potentially fraud. It could potentially get that serious, depending on the severity of the situation.
Sure. It seems to me that one of the big baseball bats that they're holding over people's heads is the fact that now, for the first time, the foreign financial institutions themselves will also be providing the exact same information to the IRS, almost like a 1099 regime, where they can match up what the individual reports versus what the foreign financial institution reports. Is that really the teeth that's making people say, well, I better report, because if I don't, it's going to be reported by my financial institution anyways?
Yes, in fact, it's getting harder and harder to be in hiding as regards foreign assets. With foreign banks coming forward and cooperating with the IRS, the potential of getting caught if you've been hiding foreign assets that were reportable are getting greater and greater. So coming forward is of utmost importance if that is the situation.
And what effect is that having on trying to? I'm sorry. What effect is that having on, let's say, the tax amnesty programs? They've been around for a long time, but how has FATCA forced the issue, and is there an increase in people asking to come in from out in the cold under these tax amnesty programs?
There is. In fact, back in June, the IRS announced that they've already brought in about $5 billion, that's billion with a B, in regards to the previous disclosure programs. There is one still in effect now that has a indefinite deadline. In other words, they have stated that they're keeping it going. With previous programs, there were deadlines to comply with that, but now this is an indefinite deadline for people who need to come forward with foreign account assets, and they have, however, stated that opening could be shut at any time. So people are coming forward. We've had several cases of that. So definitely people are coming up to become compliant with the IRS.
So talk about who is eligible for those types of programs, and maybe a little bit about anything more about the current program, the benefits, the drawbacks. What are you seeing with regard to amnesty programs?
The amnesty program is for taxpayers who have undisclosed foreign accounts or undisclosed foreign entities and need to report unreported tax in regards to those. Basically what they have to do is, they can't have already been caught by the IRS. They can't be under investigation. They have to have a clean record in that regard. And then they have to get preliminary approval from the IRS, write a letter generally stating the issues. The IRS writes a letter back saying whether or not they've been preliminarily accepted into the program. And then at that point, they can submit past year's tax returns that need to be amended to report the unreported income, to report the foreign entities, as the case may be, to file TDF 90 FBAR reports that have not been filed. There's also a percentage penalty on unreported foreign bank accounts that they will calculate. Right now, that penalty is 27.5% of the highest balance of the accounts that had been unreported. What they want is the last 8 years' worth of tax returns, or the number of tax returns that need to be adjusted in harmony with getting compliance. Then at the end, the IRS will review everything to make sure everything's in place. You pay your penalty, you pay your unreported tax, and then you execute a closing agreement, and at that point the case is closed. So that's the general procedure for the amnesty. program.
Okay, so if you come in under the amnesty, you're basically talking about civil fines and penalties. But if you don't come in under the amnesty, then you're really talking more about criminal prosecution. Is that the big distinction between being inside or outside of a tax amnesty program?
Yes, pretty much. Coming into the program, they don't outright guarantee that there won't be a fraud. A fraud penalty in that case, but they do say that they will not recommend that because they're just trying to keep that window open. But it would be silly of them to charge somebody with a fraudulent situation once they've come forward.
Right.
However, if you do not come forward and you have that situation, you're looking at potentially up to 5 years of prison term. You're looking at $250,000 fine. It can be very severe if you get hit with a tax evasion penalty, and so it's very important to.
Okay. Well, listen, we're going to take another quick break, and when we come back, we're going to talk about folks who actually live and work abroad. This is Joel Nagel with the Global Legal Advisor here on the Overseas Radio Network.
OverseasRadio.com, broadcasting from Panama to Paris and beyond.
This is Kathleen Petticord and Leif Simon with the Live and Invest Overseas Minute on the Overseas Radio Network. If you're in the market for a home of your own in a foreign country, one important thing to understand is that it's not possible in much of the world for a foreign buyer to borrow locally for the purchase of real estate.
In Europe, foreign residents can find local financing, and the process is pretty straightforward, similar to what you'd used to back in the U.S., and the terms are going to be good. However, in Latin America, there are only a couple places that you can get local financing. One is Panama, where the market is very similar to the U.S. in terms of interest rates and length of loan, and the other is Mexico.
When bank financing isn't available, as would be the case in many places where you may be shopping, your option is to try to arrange financing with the individual owner or developer you're buying from.
And in the past, it's been possible to borrow money out of your property in the U.S. In the current climate, that's not really an option. So today's best option is to negotiate seller financing. This is a reasonable possibility in Panama, Belize, Colombia, Argentina, Uruguay, and a few other countries.
For more information on making the leap overseas, visit us online at liveandinvestoverseas.com.
Are you interested in moving to Belize? Are you looking for real estate experts who will help protect you throughout your entire investment purchase in Belize? Then Rainforest Realty is your answer. Rainforest Realty is a team of certified international property specialists that have helped thousands of people from all over the world invest in Belize and make Belize their new paradise. Team Rainforest are real estate professionals that practice a very high standard of ethics and integrity. Rainforest Realty will help you decide if Belize is right for you. Take action today and make sure that you have the most qualified professionals helping you with your investment in Belize. You should have a buyer's agent servicing you and, most importantly, protecting you. Contact Rainforest Realty today. Find out if Rainforest Realty can become your buyer's agent in Belize. That's rainforestrealty.net.
Voyage for Health connects you to the most affordable medical treatments abroad. Save up to 80% on surgical, dental, and wellness procedures by traveling just a short distance from home. Taking care of your health is essential to life abroad, and you need to know where to go and whom to trust for your medical needs. So, don't choose your healthcare provider blindly. Let Voyage for Health be your guide. As a leading medical tourism provider, Voyage for Health has the knowledge and expertise to connect you to the best doctors abroad, and they will coordinate every detail of your medical journey. For more information and download your free medical travel handbook, visit voyageforhealth.com today. voyageforhealth.com.
Live call-in shows and hosts from your favorite countries. This is the Overseas Radio Network.
Hello, and welcome back to the Global Legal Advisor. This is Attorney Joel Nagel. We're broadcasting live today from Sewickley, Pennsylvania, with my special guest, Maury Glazer. and his colleagues, Teresa Johnson and Gary Sheeling, who are coming to us live from the Dallas, Texas area. And Maury, before I continue on with a few last questions here in the last segment, for folks that would like to know more about, what you're doing and how your firm can help them, whether they have individual or business issues, what are the best ways for folks to be in contact with you?
I think the best thing to do, because everybody is swamped trying to get individual cases completed, is to email me at mglazer@glazerfinancial.com. And then then we have 15 accountants here, and I try to, or Teresa does, or Gary, we try to bring in one of the younger accountants to start working on the case. But if they email me, then we can start the process.
Okay, super. Now,
and we have many people here, Joel, so it's not like we're, we got plenty of help to try to bring in the work and get things moving.
Yeah, I know you have a big organization.
Process. Gary Shearling is handling the certification process for all the amnesty programs that we put in over the last couple of years, and it's quite a process that Gary's going through, dealing with the IRS, who has basically lost hundreds of pages of documents that we have to resupply them.
Right.
Yeah, I'm sure that's got to be a very complex and bureaucratic bunch of cases to have to deal with. In the last segment, I want
to add on to what Teresa was saying. She's given the process, so how we get into it and what you file and all that. Well, we're now seeing mine at the tail end of it now. We've actually completed the entire procedure on one case and signed off, had the 906 closing agreement. Everything was totally done. I have a second one that I have verbal conclusion, and we'll probably get it in the next week or two to close off. And we have several more cases where they're requesting all the backup documentation to support the reports that were filed under the amnesty program. And like Maury said, they seem to be scattered all over the place, so we resubmit most of it. And then we almost have to at times train the IRS agent, I think, because they're just kind of been crashed into the program. And we show and go through them as how we got to the penalty calculation and how we reported all the reports. And once they're done with it, then they certify it and clear it and give it to the manager, who then, or technical advisor actually, reviews it. And then ultimately we get a clearance letter. And so then we're sort of done with the program, not guaranteed to not have an audit, but we've got it certified and we've gone the cycle. And so there is a procedure and it's beginning to work. Although it's a tough slog.
What happened was we were sending everything to Philadelphia.
Right.
But then they decided to change the procedure, and they broke up all the stuff and sent it all over the country. So how many different places are you talking
I'm
to?
dealing with at least 6. They're in Florida, Houston, Idaho. I think in Missouri I had one. They just scatter them to different agents, and in the process of sending out the documentation, this whole packet becomes undone, and so they're missing things. So we're basically resubmitting it to the agent, which is the best way to do it. And then, of course, they want the supporting documents that weren't filed with the reports to support the income and the reporting and the accounts and the balances and all that kind of thing.
Sure. Well, it's good that you're, keeping track of all that for the folks that need your services. And, if I had a client that needed that kind of service, I would certainly direct them to you guys, because I know you have way more experience than the folks probably at the IRS who are doing it from the other side of the table. But, in the last segment, I want to talk a few minutes about folks who actually live and work abroad, as opposed to folks that have, let's say, corporate business structures or investments offshore. How is the, tax and reporting requirements for folks who live outside the United States different? And what kind of things do you try to keep in mind for those types of folks?
Well, most of the issue is trying to determine if they're offshore, if they're a permanent resident offshore, or if they're offshore for 330 days, so we can determine their foreign earned income credit and their housing exclusion and their expenses, because we have to report all the income even though they're offshore. So we've really got to set up a whole procedure to do the accounting for that offshore income and the assets and whatever. And, of course, anybody who keeps their citizenship still has to file a U.S. tax return.
Yeah, no, we're not talking about people who expatriate, but for folks who live and work outside the United States, they have to file all their tax. We understand that. They have to report their worldwide income. But how is their tax return different than the person who lives here in Pittsburgh or Dallas?
Well, most of it has to do with the foreign income credit and
the foreign tax exclusion.
The exclusion.
If you're out of the country for like 330 days of the year.
Right. So explain that exclusion to the listeners.
Well, currently, if you're offshore and you stay offshore for 330 days, or you're a permanent resident offshore, you can exclude approximately 95,100 each year for yourself and your spouse, if your spouse works with you, plus a foreign housing exclusion, plus ordinary business expenses that you occur, and then you also can get foreign tax credit depending on how all that works out. So you're not going to be double taxed on the income, but you are going to have to pay the tax. You're going to exclude it in the U.S., but and it comes out pretty good. Actually, most people don't realize it, but even if they have a company in the U.S. and they're offshore and they get paid, they're going to get the foreign income exclusion. And if their Social Security is paid in the U.S., then they're not even going to have to pay Social Security except on the excess, maybe Medicare tax. So it's quite a benefit to everybody to be offshore working.
So it can be an actual benefit. I mean, it can be an actual issue that causes people to consider, going back to your issue about planning, people can consider the benefit that they get from actually living and working offshore. And in an internet age, more and more people, I think, have the option to really truly live and work, outside the United States if they want to.
Yeah, we have many clients now that either temporarily or full time have moved offshore, still U.S. citizens. They haven't expatriated, and they get tremendous tax breaks.
Mm-hmm.
Our client in Turkey, which Gary handles most of the transaction, he moved offshore because I told him, I said, you're spending more time offshore than here. Why don't you just move there? And he's Turkish, and so he and his wife both pulled down the $95,100 as salary, so that all gets excluded. And then his son is a radiologist, and he reads X-rays from the U.S. in Turkey, and his wife types the reports for his partnership here in Texas, North Texas, and we have a tremendous tax plan. So it really comes out pretty well if you do the planning and go through the process.
Maury, if somebody is listening to the show and they live abroad, work abroad, have investments abroad, have structures abroad, companies abroad, there's this sort of international dimension to whatever it is they're doing, and they really aren't sure whether their tax and accounting advisors are competent with regard to those matters. How can they really find out? I mean, I have clients that call me and say, there's nothing to it. They seem to sort of downplay it altogether. And then other people are so extremely opposite way and say, oh my gosh, this is, rocket science and there's no way my existing tax professionals can help me. Where's the real answer there?
Well, unfortunately, we were talking about it when you were off the air with your commercials. Professionals today, truthfully, aren't studying what they need to do. It's bad enough that the IRS doesn't know what to do, but the professionals today don't. We spend a lot of time with continuing education, so we're constantly looking at what needs to be done. And I say to everybody, hey, get us the information. Let's take a look. Let's do some planning. Let's do a tax plan. Let's tell you where you're at, what you need to do, and how much is it going to cost you to stay compliant. Because it's very important to stay compliant if you're going to be a U.S. citizen. That's the tax law, and it's not as difficult as their accountants or whatever say it is. As you know, structures can be set up, things can be done. It's more important just to keep track of the information. It's like here, document. That's the goal. If you have the documentations, you're going to be okay. And you need to have professionals that really stay up to date and know what the heck is going on. We feel really at the top of the curve on all of this. And of course, working with someone like you, with all good respect, you know where to go with the offshore things. I was saying to this one couple yesterday who has property in Nicaragua. I said, you need to come to the session. Let's talk about this stuff. His accountant just doesn't know anything. I'm almost positive.
I know from my perspective, when I'm talking to a professional and they're not familiar with terms like the Form 3520 or the 5471 for corporations, they've never heard of the concept of an FBAR, a foreign bank account report, the new form Teresa was talking about, the 8938 or the 1040NR, to me that says that they don't really have the background and expertise. So I think we're going to have to leave it there. Mari, thanks for being on the show. I hope you come back and visit us throughout the year and from time to time as the new rules and tax rates unfold. I know I'm going to see you mid-January at the Global Asset Protection Investment Conference in Managua. And I want to wish you and all of your staff Merry Christmas, Happy New Year, and thanks again for being on the show.
And enjoy your snow. It's only it's not cold here. It was down to, 55 this morning.
Yeah, and windy.
So we'll welcome you to Dallas. Very nice.
Well, all right, Mari. Thank you very much. Listen, this is Joel Nagel with the Global Legal Advisor. Next week, we will be off for the holidays. We'll be back on Wednesday, January the 2nd at 3 p.m. Our time and date has changed from Thursday to Wednesday, so we'll be back Wednesday, January 2nd. This is Joel Nagel with the Global Legal Advisor.
From China's Great Wall to the Leaning Tower of Pisa, this is the Overseas Radio Network.